All right. Now, of course, we're joined by General Manager of New Business Ventures, that is Eric Muriuki. Thank you so much for making time for us, and welcome to Business Today.
Thank you very much.
All right. Now, of course, the financial sector in the country is one that is talked about a lot, especially mobile financial services. Now, last year, the Quantum Global Research Lab actually say that Kenya is pioneering mobile financial services in Africa. So what do you have to say about the particular growth of, using mobile for accessing financial services within the country?
Thank you very much for the question. I think, as you said, it's very widely reported about the progress that Kenya has achieved with mobile financial services. And the mobile financial services story really starts back in 2007 when M-Pesa was launched in this country. And we've seen the adoption of mobile as a method for accessing financial services, because essentially that's what the term fintech refers to, just the use of technology as a method for accessing financial services. And we've seen mobile financial services grow in leaps and bounds. I think, if I'm correct, we have just about 28 to 29 million adults in Kenya. And the latest numbers I've seen from Safaricom and also the CA, we have just almost an equal number of registered mobile money users across all the three mobile money operators. And the telcos definitely took advantage of the telecommunications infrastructure and saw the gap before banks. But we've also seen almost every bank in the country now come forward with a mobile financial service. And that is a story that CBA also has contributed to quite proudly, with being the first bank that co-created, or at least worked with Safaricom, the creation of M-Pesa. 6 years ago, we were the first bank in the world, actually, to create M-Shwari, the first mobile savings and loan service. And also, we now have the leading fully digital financial services, not just application, but actually a full banking service that we've dubbed Loop.
All right. So you talk of such applications that allow people to access loans, I believe Loop up to 3 million shillings.
Yes.
Now, when you actually process these loans, how do you, as the lender, actually hold the consumer accountable to pay back that loan? Because it's not a face-to-face transaction, is it? Yes.
Appreciate, as I'd said earlier, with mobile financial services, we're just moving what was already happening in the physical world into a digital world, and delivered principally through the mobile channel. And the same principles of banking actually do apply. Access to credit is something that you actually qualify for based on the information that the bank is able to access and see about you. In the traditional sense, that had been by way of statements, but now that we have mobile financial services, we then are able to see your payments data as you're transacting on mobile money. We also, Kenya has one of the most reliable credit reference bureaus. We are also using the credit reference bureaus also to pull data that is able to inform us about your ability and willingness to repay credit. And we've developed algorithms that then are able to tell us how much is Malika, for instance, able to qualify for, depending on the tenor of the loan. So with M-Shwari, we extend credit to customers for 30 days. With Loop, we're able to extend credit to customers for up to 3 years. And these two lending propositions do not require any collateral, as is the case with some of the traditional banking services. Now, when it comes to repayment, repayment is actually a customer choice first. And informed customers recognize the utility or the benefits that they get when they're able to access credit from a bank. And the fact that that is a very useful service, they then would not want to misuse their access to credit, and are looking to actually continue using the financial services better and be able to grow their credit limits even higher.
So essentially, the vetting process and the security of the loans is still just as stringent as it would be in the physical world.
Exactly.
Now, you did mention a little bit earlier that, you have data suggesting that almost every adult within the country does make use of mobile financial services.
Yes.
Now, we have seen markets within the US and Australia reach this point of saturation when it comes to people using these services. How far do you think Kenya is from that point?
I think let's look at saturation at different levels because it depends on what you're counting. If you're counting penetration of mobile handsets, because that is first the piece of infrastructure that needs to reach every prospective customer, I think we are at about just shy of 90% penetration of every person that can have a mobile phone, about 91% penetration of that. Now, the services then that can be delivered across that mobile channel will then vary. So when you look at mobile financial services, that 90% penetration of mobile phones, we have close to 90 or even greater % penetration of that installed base that have access to mobile financial services. And that's primarily today, that is mobile money and mobile savings and loans through Mshwari. But as you layer on or interrogate the more penetration of the more complex financial services, then you find the penetration is not as extensive. The service that we recently launched, Loop, a digital financial service, is specifically targeted to smartphones. Now, being smartphones, then we now have to look at the penetration not of phones, but smartphones specifically, which is now at about 46-47% for the country. Yeah.
All right.
So there's still quite some way to go.
So there is still, of course, headway to be made.
Headway to be made, and the market continues to expand.
All right. On that note, we're going to take a short break, but stay with us on KTN News. We'll be right back.